Alrighty, boys, welcome to this lesson on freaking liquidity, baby. Why do I look kind of dumb? All right, whatever. Anyways, boys, so we just went over liquidity, but now we're going to go over types of liquidity, right? So you already have the foundational understanding of what is liquidity, which is essentially just where a lot of orders are resting. Those orders need to be filled, therefore price trades to that level and liquidity is swept, and then the real move is initiated, and this and that. And it all sounds so complicated, but it's really not, right? It's mainly just learning how to identify swing highs and swing lows, but there could also be different types of liquidity when liquidity is accumulated or generated in one area. When there's news, there's plenty of things. And so I want to show you how to look for the right liquidity, right? Like, how do you know which are the significant highs and the significant lows? Okay, well, let's go over it. So types of liquidity. There's session liquidity, which is going to be your external liquidity, and then there's going to be your internal liquidity, which is going to be like your buy side liquidity. You're just your regular buy side liquidity, sell side liquidity, which is going to be like mainly like your swing highs, swing lows, equal highs, equal lows. There's LRL, which is low resistance liquidity, and there's data highs and lows, etc. But I'm going to go over just the most important ones. So understanding higher time frame liquidity. So understanding higher time frame liquidity is very important. Being able to identify Asia highs, Asia lows, and all these things are incredibly important traits because price is very reactive towards session liquidity, right? So when Asia highs gets taken, and if you don't displace above it and we sweep Asia highs, you typically expect price to now start trading lower to Asia lows. Or if London lows gets taken, now you're expecting price to react off of that and now start trading towards London highs or whatever there is above, if there is anything above, right? And so obviously right here you can see I've marked out Asia highs. I have London session here, so we have Asia session in blue, London session in orange right here. And so the reason I'm drawing this out is because let's say like price looks like this for some reason going to some morning, right? We're about to go into New York session, and you know, New York session opens and you see New York session come down and sweep London lows. And you see that after sweeping London lows, we start getting a reaction. Cool. From here, you can now expect price to trade to this other session liquidity, right? You have London highs right here. You have Asia highs up there. And so when you get that sweep of London lows, price will be reactive and now trade towards London highs, maybe react off this and come back lower, or trade all the way to Asia highs, right? But these levels are really important, and understanding where the session liquidity lies, where the session highs and lows are, is really important because you will notice that price reacts to those levels, right? So let's say otherwise we didn't trade to London lows and then got that reaction and traded higher, but instead maybe we got something like we came up and swept Asia highs. Well, guess what? Now we're most likely going to react off of this sweep and now trade down to a London lows, right? But of course, it's not just as simple as that, but it is very much how price moves. It reacts off of session liquidity all of the time. So how can you get better at marking out that? Well, for starters, there is a great indicator you can use, which is going to be this this one right here. I will actually, let's see, settings. I will link it. I'll link it for you guys. But it should be called like session indicator or something. Let's see, actually. Let me pull it up for you guys. So it should be the freaking ICT kill zones. I believe it's this one. So if not, sorry, I'll make sure to link it and make sure that's correct. But let's go over price real quick. So let's start noticing just common occurrences in price. So we have New York in purple. We have Asian session in blue, London session in whatever that color is, right? And this is today, by the way. I just have the 30-minute time frame pulled up from today. Literally price is moving as we speak. And so let's look at it, right? Here we have Asia lows. Asian session. You can see Asian session highs marked out here in that blue line, Asian session lows marked out here in that blue line. What happens? London session goes ahead and sweeps Asian session low. What happens after that? We trade to Asia session highs. Do you see that? And so then what happens? We create, now we have London lows and London highs. So what happens here? We sweep London highs and price goes back down and takes London lows. Are you seeing what I'm marking out here, right? So let's look at this a little bit closer, So we have Asian session lows right here, right? We have Asian session highs right here, right? price trades, London session opens up and price trades lower and sweeps Asian session lows. Right, there's a sweep, right? What happens after price trades lower and sweeps Asian session lows? It displaces up and trades where? To Asian session highs, whatever, beyond. Then what happens? London lows is created. What happens before a move down happens? London highs is created. What happens after London highs gets taken? Right here, bang, look at that candle. That candle sweeps London session highs. And then we get that displacement lower towards London session lows. And notice how when we take the London session lows originally, we do get that strong reaction, right? Look how that candle wicks. So you can clearly see that price is super reactant towards these levels, right? And this happens all the damn time. So it's really important to be able to identify session liquidity because you'll start to notice how price reacts to those levels all the time. Okay, so that's really going to be like your higher time frame liquidity, understanding just session highs, session lows. Definitely get that indicator, some sort of session indicator, which is going to help you a lot, or just, learn to understand when these sessions are. And then there's lower time frame liquidity, which is just going to be, this is like super rough. Like you have buy side liquidity, you have sell side liquidity, equal highs, equal lows, low resistance liquidity. But what does that really look like? Well, let's look at it right here. So sell side liquidity, right? When you have bullish price action, you'll have these swing lows be your sell side liquidity, right? These swing lows that aren't being swept, that's going to create sell side liquidity. And so when price goes ahead and trades lower and sweeps that sell side liquidity, then you have the green light to long because you'll most likely get a reaction off that, and then you'll go higher from there, right? Or sometimes you'll go ahead and run all this sell side liquidity before you get, that move up. And then there's buy side liquidity, which is just when you're in downtrending price. These swing highs are going to be your buy side liquidity, right? So if you're looking to take shorts because price is bearish, we'll wait for price to trade higher and sweep some of this buy side, and then try to find some short. But you always want to have a liquidity sweep prior to entering. And then there's basic stuff like equal highs, equal lows. This is as simple as when two candles trade to the exact same level to the tick. If they make this, if they close or at the same exact highs, or the wicks are at the same exact highs, equal highs, and with lows, vice versa, equal lows. Right? So it kind of looks like that, right? You have like two candles that trade to the same level, equal highs, two candles that trade to the same level, equal lows. Neither is sweeping each other. They're exactly to the tick, the same. And then you have something like low resistance liquidity, which is going to be just an accumulation or generation of liquidity without those lows or highs getting swept. And so when you have an accumulation of like lows, maybe like relatively equal lows and stuff, right, that creates low resistance liquidity because for price to trade higher, it should be sweeping these lows. But occasionally you'll have moments where prices generates liquidity. So you have all these lows jumbled up together, none of which are sweeping the one before, and that's low resistance liquidity. It can be the same way with highs, right? You see how like there's downtrending price, but price isn't breaking above these highs, and so that's low resistance liquidity as well. And then data highs and data lows, this is super important to know. So when you have a news event like a red folder news, like let's say you have like 8:30 a.m. CPI, that singular candle, of course, will be very responsive to news, and you'll have a big wick at the top, a big wick at the bottom. That's going to be your data highs. That's going to be your data lows. So definitely get used to marking that out because that's also a great liquidity pool, right? So let's say if like, I don't know, price is just trading, whatever, chopping around, and eventually it sweeps data lows. Well, what can you expect now? Price to trade to data highs. It's very similar to how like session liquidity works and how responsive that is. And so I'll try to find everything, I guess, like right here in front of you. Let's go to like 10 a.m. here. I believe there might have been 8:30 news today. We'll see. Okay, so I mean it was maybe it wasn't red folder, but in theory, let's say this was that 8:30 news candle right here. It's as simple as identifying its high and its low as data highs, data lows, right? Data lows, data highs. This is not a very strong news candle today, so nothing too crazy to mark out, but yeah. And then regarding equal highs and equal lows, right, you can use an indicator of some sort, or you can just learn to identify them on your own. But right, you can see here that we have marked out some equal lows, price rated to that exact same level to the tick. And this is happening literally all the time. So that one's pretty easy to spot. You can use an indicator. You can get better at doing it on your own. Probably better to do these things on your own, but if you need an indicator, it's not the freaking end of the world, especially for something as minimal as like equal highs and equal lows. So yeah, that's also very important, to be able to identify equal highs and equal lows. And then of course we have that LR and all that stuff, which I can actually identify right here as well. So identifying LR is just going to be like an accumulation of highs or lows that are not being swept, right? It's like, as you can see here, price is trading lower, but these highs aren't breaking past the one before, so you get a generation of low resistance liquidity, right? Where else can we see a generation of low resistance liquidity? Well, right here is also a generation of low resistance liquidity, right? You can see that price is chopping around, sort of trading sideways, trading higher, and we're leaving these lows behind. So you can see price goes ahead and sweeps those lows, whatever, all that good stuff. And then buy side, sell side, right? Just get comfortable marking out significant highs and lows, right? So those highs that are very obvious, blatantly sticking out. Buy side, lows that are very obviously sticking out. Sell side, bang. What else? Sell side, bang. More here, sell side, bang, right? These are very obvious lows. And the same way goes with your highs. So if you're marking out highs, let's see. These look pretty damn obvious to me. We got some buy side up here. We got some buy side up here. We got some buy side up here. Whoops. And we got some buy side up here. So shouldn't be very hard to identify, right? Mark out your significant highs and lows. Those are gonna be your buy side and sell side levels. And then of course, start getting used to marking out session highs and lows. That's gonna help you determine your bias, seeing where price is reacting off of, oh, okay, we swept London lows and we're now displacing higher, so I can expect price to trade to London highs. It's analytical stuff like that that goes a long way. But none of this is really as complicated as it seems, right? So if you want to refer back to this real quick, like it should be as simple in your brain as just analyzing like this. Sell side, swing lows, buy side, swing highs. Equal highs, highs that traded to the same level, equal lows, lows that traded to the same level. Low resistance liquidity, accumulation of lows, low resistance liquidity. Could be also an accumulation of highs. And then data highs, data lows, the wick of a news candle. And then of course, you have your higher time frame liquidity, which is going to be that session liquidity. Oh, and I forgot to mention, you could also have something like, let's say like previous day low. So let's say, you know, the daily candle from yesterday. That'll be your previous day low, right? Common sense. You can have previous day high as well. So stuff like that as well. And what does that look like? Well, right, so if this is the current trading day right here, you know, we're on the daily time frame right now. This low and this high of yesterday is going to be our previous day high and previous day low. And that's also really important to note because, you know, you'll notice things like, okay, if previous day lows get swept, then we trade to previous day highs. Just little stuff like that. Right here, previous day high gets swept, we trade to previous day lows. So also something important to note. But yeah, that pretty much wraps up. Oh my god, types of liquidity. So yeah, thank you for watching, boys.